Hey guys, it's Stephanie Johnston here at Service First Mortgage and wanted to finish up this video grouping this morning about interest rates. So what most people want to watch is what's going on with those. What are they doing? Volatile is the key word. We are seeing so much change in interest rates that's just not the norm. In 14 years, I don't think that I've seen this much volatility from day to day and really hour by hour, which is the new norm. We said, if you like a rate, take it. It might literally not be available in 5 minutes. And that's what we are experiencing in our mortgage world day to day now. So a little backstory on what we've been in the last couple of weeks. So up until March 9th, every day we were just getting a little better, a little better, a little better, which is good. Historically, to drop slowly is a lot better than going down drastically in one day or up drastically in one day. So we were rocking along, doing very well. Well, during that period, up until the 9th, there was more mortgages originated in like a month than they thought that were going to be originated in the entire year. That's crazy. Everyone was benefiting by a refinance. Things were rocking along. It was great. And then we realized what happens in what we call the secondary market when that many loans are originated at the same time, and combined with then the virus getting worse, the coronavirus, and what that happened in the mortgage world and what the things that we thought were about to come about. So March 9th marked one of our days that we said, you saw all those posts, these are the best rates in history that we've ever seen. And that was a true statement. We saw some really, really good rates. Rates were still great, but we saw them that day. That was also the first day since 1987 that the stock market was halted. I didn't realize that it had been that long or even that was possible. And that meant that they stopped trading in periods throughout the day because the stock market fell so much. Well, generally when the stock market falls that much, people take their money out of stocks and put them into bonds. So all signs would say that when you fall that much, the days after that, we're going to level off a little bit, and then we'll actually see better interest rates. That's historically what should happen. It didn't. And that's where it kind of went, forecasters versus what happened was not the same. So instead of investors taking their money out of stocks and putting them into what we call mortgage-backed securities, a safer investment, they took them out of everything. So basically we had the stock market and the bond market, which mortgage-backed securities market, when I say bonds, both do really poorly at the same time. Not normal. Go throughout that entire week, and from Monday through Friday, we saw rates go up about 1%, 1.25%, depending on the loan products. And we went from all-time lows to like 1-year highs in 4 days. And I think that that's what shocked most people. And people didn't think, they're like, how is that possible? And I'm like, it is. We went up so much, so quick. In conjunction to that, what you have is other lenders also raising rates because of volume. We here at Service First do not do that. We get through it. We are blessed when people call us for loans, and we don't raise their rates because we have too many loans. That is something a lot of the bigger institutions are currently doing. And what happens with that is there's only so many loans that can be purchased. And so when all of these loans got originated, well, on the secondary market, they need money for them. And there's delays in a lot of lenders processing and underwriting and getting the loans, what we call funded, and then off their what they call warehouse lines, which is the line of credit, and then getting the investor to buy it. For the first time, people got backlogged way down there that we didn't even think about. We're thinking about processing and underwriting, like, wait, the investors can't buy these loans quick enough as they're being originated. Then you kind of compound that with COVID and the fact that the government comes out and says, hey guys, you might not have to make mortgage payments for 12 months. Well, guess what happens with that? If you had money and you put it in a mortgage-backed security, which is tied to a house, that's real estate, that's pretty secure, right? But then guess what? The government says, hey guys, you might not have to make your payments. Do you think you're gonna wanna be in mortgage-backed securities and like that put your money in that when you might be not collecting payments and you don't know if someone's gonna get in trouble and we don't know what's gonna happen? It's a scary time. So you have a lot of investors, especially in certain loans that are a little more risky, like lower credit scores or FHA products with certain groupings or some jumbo stuff. say, I'm good, but thanks, I don't really want this. And if they do do a loan, they charge a premium because they don't want it. They have enough. And so until at this point, there is no resolution for when the government says, hey guys, you don't have to make your mortgage payment. That servicer still has to pay the payment. You still have taxes, you still have insurance. So I would imagine in the coming weeks, we will hopefully get some guidance and some help for the banks and the mortgage servicers, for people that don't have to make their mortgage payments, how that's going to affect them. But guys, I mean, again, that's kind of why this is happening. So we do hope that that works itself out here coming down the next coming weeks. So what we are saying is, in the last couple of days, rates have actually been better and we're leveling off a little bit. We don't really have a 100% crystal ball as to when or how or will rates drop. But at the end of the day, they're good. So interest rates are good. They're just priced very strangely now and they move very quickly. So the very best thing that you can do is if you are looking to purchase a home and you want to, is to get qualified and to work with a local reputable lender. We hope you choose us. To go through that process and sit down and let me explain rates to you. When we say get a scheduled consultation, please do it so I can go through how this is. If the rate's higher or lower, how does that affect your payment? Here's best case, here's worst case. What does this look like? Because it's not scary. We can time it and get you a very good rate. You just have to understand that they're changing quickly. You also have to note that when you are looking to purchase and you, let's say, you got a qualification 2 or 3 weeks ago from us, that rate is not valid, whether it's good, bad, or indifferent. You gotta tell us literally when you're ready to buy so that we can keep you updated on what's going on with rates. If you're looking to refinance, one of the things that I would highly suggest is we would get all of your information. So your, we get all of your documents, get everything ready, and then we either say, okay, great, I love where rates are today, let's lock. Good to go, secure it. Hey, you're not so excited about where the rate is at the very moment. Let's go ahead and be ready. Talk about what the savings would be if you get to certain milestones, if the rates do drop there. And then we would get you monitored and watch for when that rate is and have the ability to lock you in at that time. Because we might see rate windows that I got on for 30 minutes. And if I have your information, you get to take advantage of that. And I can say that, while I respect trying to ensure that you call multiple lenders and get the best quote, that can be really a detriment right now. Because by the time that, you call 3 or 4 different places, you wait for them to get back with you. You might have lost the window for that great rate because you called 5 people. And its timing is more important than anything in the refinance world. So that's where, again, we want to do that for you. We are sitting at watching monitoring rates every day. Lastly, if you are a real estate agent, I would highly suggest you don't quote rates. And I know that is a common question that the clients ask and they want to know, but it is all over the board. It depends on credit score and down payment and loan type and the hour that it is and what's going on. That I would say that, historically rates are very, very good. We're seeing great rates. We're just seeing them move very quickly. And please talk to my preferred lender about rates and be ready to go so that you know how this is going to affect you as far as going forward. So anyways, I hope that was good information. Again, rates are good. It's just, again, the volatility is kind of a little bit crazy right now. So that is our job. That's why you hire us, to make sure we are watching those for you and give you the best advice to secure the best rate possible on your home loan and do what we can to get you that new purchase or refinance your house. Talk to you soon. Thanks.